What's up, guys? In this video, I'm going to share with you a simple candlestick pattern that helped me earn $83,000 in my personal accounts this past week. I'll cover the concept along with all the trades I took and the reasoning behind them, so grab your notebooks and let's get right into the video. So let's first cover the concept or the candlestick pattern that I look for all the time. And if you guys have watched some of my previous videos, you'll know that I trade these quite a fair bit. So let's draw out some candles here. So what we're looking for is just a single candle, and then the next candle. Okay, if I'm anticipating bullish price action, what I actually want to see is we're going to have an open. Okay, and so when we have this open, right, the candle is going to be flipping back and forth. We don't know if it's going to trade lower or higher, but what I'm looking for is it to run out either the high or the low. Now, for this example, because this is the example that I'm going to look at in NQ or NASDAQ, we want to be able to see it run out the previous day's low or the previous week's low. Okay, because this is based on a weekly time frame. So the analysis that I get into later on in the video, showing my trade ideas, is all based on the weekly time frame. So this one specific week takes out the previous week's low. So let me just draw that out real quick. So we have previous week low. And I'll make this text a little bit bigger so you guys can see that. So we have previous week's low, and as this candle is forming, right, we don't yet have a wick. Now this candle could trade higher, it could trade lower, but as soon as we take out that sell side liquidity, what I'm looking for is a rejection higher to then take out what? The buy side liquidity. So we have previous week low, and then we have previous week's high. And what we're going to get is these wicks. So depending on how far the market trades, right, based on that candlestick forming, we don't know if it's probably going to go down here. Let's just assume that it's going to go down here. That's going to print the lowest price on the week. And then by the end of the week, it's going to go and take out that previous week high. Right? So this is sell side liquidity. And I'll type it out. And then this is what? Buy side liquidity. We have previous week's low, previous week's high. And now this candle, right, depending on how high that candle trades, is going to print an upper wick. And this candle will paint green because it's going to be bullish. Now, this is what, guys? If you guys have seen my videos before, if you've seen normal price action, this simple candlestick pattern is a bullish engulfing candle. Or an outside bar. Some people call them outside bars. To me, it's the same thing. Now, what does this actually tell us, though? Now, what does this actually tell us, though? Because there's a lot of information just in these two candlesticks. So let me just draw it out for you guys. Just pretend that this is the prior week. Our open is here. So our open is here from this previous week, this one. So our open is there. And then as that week traded, maybe it traded higher initially, right, to create the high. So you guys can see this high lines up with that. And maybe it trades down lower to that low, and then it closes here. Okay, this price action right here on the lower time frame actually creates this weekly candle. So this might be Monday, Tuesday, Wednesday, Thursday, Friday, right? Now that next week, what we're looking for is what? We have the open down here now. It's going to go take out the previous week's low. All right, so we have this sell side liquidity, and then we're looking for a reversal. So when we get the reversal, maybe it's going to create a market structure shift. Maybe it's going to create a fair value gap. So here's our market structure shift. Maybe there's a fair value gap inside of here. And then we're looking to target what? The initial consolidation or the buy side liquidity from that previous week. Now, what is all of this? All of this, and I'll make this a different color. So let's just assume that, you know, this is what we're looking at from a lower time frame perspective. Now, as we're going lower, what do we have? We have distribution, redistribution, right? All these levels in here are levels of redistribution, right? So you have these small boxes of consolidation as they're going lower, right? Then you get what? This here becomes a smart money reversal. And then we have accumulation, reaccumulation. And as that market is going higher, it's creating more consolidations as it's reaccumulating long orders. And then they're going to offset their positions, right, at the highs. So this creates what, guys? This here is a market maker buy model. Okay, so we have distribution, redistribution, all the way down here. This is a smart money reversal because it's taking out the previous week's low, right? Again, this line here is our previous week low. And what we're looking to do is just take out that previous week's high. Now, all this information is telling us that order flow is changing. So what I'm looking for on that next week, because this candlestick is so strong, because it's showing me that we have a market maker buy model here, right? All of this is just a market maker buy model. What it's showing me is that the market is shifting gears. And what I'm looking for on that next week is what? I'm looking for the weekly open to trade lower initially. I don't know how far low it's going to go and what day it's going to stop. But as it's going lower, I'm trying to position myself long with the expectation that that next week is going to close up here. Okay, so all of this price action right here, Monday, Tuesday, maybe Wednesday, is just manipulation. So as it's going lower and lower, I want to try and find opportunities to get long on that market because my high time frame weekly perspective is bullish. Okay, so this is just a visual representation of what we're going to look at in the charts and the trade ideas that we're going to go over. So let's flip over into NQ and I'll show you exactly what I'm talking about. So here we have our NQ chart, and this is last week. So right now is the 3rd of Sunday, and this week's already panned out, but this is the prior week, and then I'm looking at the week before that. So this is basically the 2nd week of April. So what we got the 2nd week of April is exactly what I just showed you on the Miro board. Now, we have what? A previous weekly low, which is our sell side liquidity. And then we have here our previous weekly high, which is our buy side liquidity. So exactly what I'm looking for is this current week that we just had. I want to see it trade lower and then trade higher. That's really ideally what I'm looking for. I want to be able to see Monday, Tuesday, Wednesday, possibly trading lower to just position myself long with the expectation that we may go and target this high or possibly this high because I'm overall bullish. So even if the market's going lower, I don't want to look for bearish opportunities. And even some of the people that I'm currently teaching right now, I gave them this analysis ahead of time, but I still saw them hunting short positions for some reason. You have to align yourself with the higher time frame all the time. The higher time frame is really going to show you and tell you what side of the market you should be operating on. And if you get that wrong, you should be cutting your losers quickly and getting out of the market, moving to the sideline, and possibly just waiting for more information. So we'll run through a couple of the trades that I took starting from Monday morning. So starting Monday, so this candle right here, this is Monday already panning out. So this was actually Friday. So Friday, we had a nice strong closure and we had that new day opening gap. So Monday, I actually was trying to go long, and any price below this weekly open, you guys can see where it says WO is our weekly opening price. Any price below that for me is efficient pricing to get long in this market and hold it for higher prices, or at least scalp a position. So as we were trading down lower into the discount end of this new day opening gap, right? So you can see the new day opening gap represents the close from Thursday and the open from Friday. So the markets close right at 5 p.m. and they reopen at 6. That hour that the market is not open can sometimes create these gaps. So you'll have the close down here, but then it opens up here at 6 p.m. And that's exactly what we got. So I'll extend that line or extend that box across and use this level as a sensitive area. Now let's get into the lower time frame price action. So diving into the low time frame price action here, we can see here that we have Friday's price action. So here's Friday's low and here's Friday's high. We can see here that during the New York Open, we were up here. We took out Friday's high and then retraced. Now, a lot of traders may be thinking, you know, why wouldn't you take this short? And the problem is, if you do this long enough, you'll notice that over time, your long-term profitability gets skewed in the wrong direction. So if you're consistently trading against what the high time frame is telling you, you will slowly bleed your accounts out, because the risk to reward opportunities for me, at least this specific week, are all to the upside. If I risk one, I have a much better opportunity of making two rather than trying to short against the high time frame analysis. And my analysis is bullish based on that weekly bullish engulfing candle. So anytime I have an opportunity to go long on this market, intraday is a much better opportunity than when a short is presented. Okay, so my expectation was that we weren't going to take out Friday's lows. So you could see that I have Friday's lows as my stop loss. And when I entered, it was after I got another bullish engulfing candle on the low time frame, because I was expecting that this bearish fair value gap is going to fail. And that's where ICT traders get wrong a lot of times, is they're wondering why their bearish fair value gaps aren't working. It's because you're missing the context. When the high time frame order flow is bullish, just as I mentioned, every bearish PD array is going to fail. So when we have a sell sign imbalance, when the market is bullish, it's going to fail. We have a bearish order block when the market is bullish, it's going to fail. Okay, so this was just a very quick scalp on the day, from 19,425 up to 19,476, which is basically the weekly open. This entry here, I tried to scale in, but it really wasn't moving a whole lot going into lunchtime, so I pretty much cut the trade. But it really wasn't running too much going into PM session, so I pretty much cut the trade. And this was just a very quick scalp on the day, but it's in line with that high time frame analysis. Now let's get into Tuesday. Unfortunately, I didn't do a screen recording on Monday, but Tuesday, okay, let's dive into this price action. So Tuesday, you guys can see from Monday, we actually had quite a bit of a V-shaped reversal, right? So after we traded lower, we got this nice V-shaped reversal. We did eventually take out the intraday high. Now, overnight, this thing retraced again. And really what I'm seeing is this inverted fair value gap down in here is what I'm looking at. So it's very similar setup. I'm trading the -1 standard deviation of the Asian range. So we've taken out that liquidity. And on the day, I'm trying to buy it below the daily open. All right, so I'm getting a good fill price below the weekly open as well, with the expectation that this thing is going to expand higher at some point this week. So you guys can see there that it's respecting that new day opening gap and the inverted fair value gap. So my target really was the tariff high all the way up here. And what I like to see is when I'm entering that position that the market really is fighting on that hourly time frame and it's trading in my proper direction. Okay, so like when I entered the trade, it was 20 minutes to go to the hourly close, and you guys can see here that it's really creating this nice long hourly wick here. And my target really is the Asian range high, because we had not taken out the Asian range high yet. So you guys can see here, I'm just aligning myself again with the high time frame analysis. It allows me to be on sides and not fight the market. You guys can see here the weekly candle forming, right? So the weekly candle is already printing the lows. So I'm assuming that this retracement down to this prior week's high maybe is the low of the week. All right, but I'm just trading intraday with that idea in mind. Now, I didn't quite get the exit because it did make that run late in the PM session, and I ended up closing the stream with my group. But I've got 10 minis on. I believe I was up a fair amount of money. And again, I'm just aligning myself, and you guys can see there that the weekly candle flipped bullish. All right, so I did not get the final execution on video, but I'll share with you guys the executions that I took on Tuesday. So I'm going to show you guys actually the loss that I took overnight. So on Monday, when we inverted this fair value gap, I actually went long again on the rollover, expecting that we were going to trade higher. And unfortunately, it came down and just tagged me out just by a very tiny amount. But I have so much confidence in the idea that the weekly is going to go higher that I actually went into the trade and sized up more because I was able to get a better risk to reward. So you guys can see here that when I entered this trade, I put my stop loss at the low end of that new day opening gap. And I just exited up here above the liquidity. So late in the day, we took out that liquidity. I believe it was 3 p.m., 4 p.m. maybe. So when we took out that liquidity, I exited my trade because I don't want to hold it overnight. But all of this, again, I'm only going long. You guys don't see me going short. This sell right here is just me getting stopped out. So having that confidence that the higher time frame is drawing us towards what this tariff high is so important. So coming into Wednesday, all right, so here's Tuesday, the close of Tuesday. We're above that level. We still have this daily fair value gap below us, and we have high impact news. So if we flip back over into the trade idea, we can see here that the market traded down into that fair value gap. And I'll drop down to the lower time frame so you guys can actually see the price action as it's panning out. So let's play this forward. This is Wednesday, and we have that high impact news coming out very shortly. So you guys can see there, we're trading down into a daily fair value gap. And at this specific moment, I am still hunting long positions because we have all of this consolidation. This here, in my opinion, is just a flush on anybody that's trying to get long right now. But because my high time frame analysis is still bullish, I'm still willing to attempt going long. Now, there is a limit between how many attempts you should be taking before you abandon the idea. But unless we invalidate this daily fair value gap, I'm still leaning bullish. And you guys can see here on the next 4-hour candle, right, we get a very strong rejection. And that's basically the trade that I was in. So as we traded lower down in that daily fair value gap, look how many standard deviations we trade lower from the Asian range. There is a limit to how far this market is going to trade from a daily time frame. When it's down this much, what I'm looking for is actually to go the other direction because my bias on the week is still bullish. We have Monday's low, that daily fair value gap, and then we have this low resistance liquidity up here. So what I'm looking at is this 15-minute inverted fair value gap. So after we purge, after we trade into that daily fair value gap, this next candle inverts it. And then when we get another run higher, that's when I entered. Okay, with the expectation that we're going to start trading again towards this weekly open, maybe take out the lower resistance liquidity, and then eventually trade higher. So that was the final trade of the week that really kind of pushed me over the top. And if we just continue playing that 15-minute time frame through, you guys can see here by the end of the day, this thing really rocketed. Okay, and this is aligning yourself with that higher time frame. Yes, you can make money on the downside, but the risk to reward opportunity is to the upside. There is so much more money to be made on this run higher. Okay, and we can see how the week finished because the following day, right? If we just zoom forward, this is how the week ended, just as I predicted. So we had Thursday, bit of a sideways day. This again is just sucking in people to get induced short, and then on Friday they send it higher one more time. So again, being aligned with that higher time frame analysis is so important and key in my trading. So we can see here how the weekly candle closed. So everything that I outlined from on this chart right here, that's what you're going to see on the lower time frame. All right, so here we can see my account statement from my personal account. You guys can see here that my gross P&L was $83,197. I took 36 trades, but that does include multiple entries. So the thing with NQ is the book is a little bit thin. So if I place an order for say 10 contracts, I might get filled at different prices, and it's really the same trade, but for some reason, the trade of 8 or Ninja Trader statement shows more trades than it actually is. So if I go down here, you can see here, I may have entered some of these trades at the exact same time. So this one, you guys can see it was at 4:48 in the afternoon. All these trades were just one position. They just get filled at different prices because the book is too thin. So if you guys study level 2 at all, you'll see that a lot of the trades on NQ are just like 1, 2, 3 contracts. They're not huge trades. So that's the reason for so many trades. They're technically not that many trades. So you can see that my profitability, 70% win rate, expectancy $2,300. My average trade time is actually 5 hours. So if you guys are watching this and you're struggling on the low time frames, maybe trade the higher time frames. To me, they're much easier to kind of position yourself properly. You have much better stop losses. You don't have to worry about getting stopped out and then re-entering. You're just not realizing as many losses. You might be sitting in drawdown for a fair amount of time, but you're not going to be taking losses, going back into the market, trying to resize, make it up, stuff like that. So we can see here my P&L history is quite good. My largest winning trade is $10,800. My largest loser is $3,800. And we can see here my P&L history over the course of 1 week, guys. So outside of this one euro short, all of these were only going long on NQ. I did not take a single short in NQ this week because of that weekly bias. So I hope you guys enjoyed this video. If you want to check out all the execution models that I use in my trading, make sure you check out my downloadable PDF. I'll leave a link in the description. So until next time, this is Kyle signing off.